With more than 6,000 small and micro-cap companies listed, if you're looking for the next apple at the earliest stage, then ChannelChek truly is the orchard. The listed companies support ChannelChek, so it's free for you, the potential investor, to gain access to institutional quality research from FINRA licensed analysts, advanced market data, industry reports, news, and a growing catalog of videos and webcasts. Make sure to subscribe to our YouTube channel and register for ChannelChek so you're always up to date on what's going on at the small and microcap data place. Welcome to the virtual Roadshow series presented by ChannelChek. This Roadshow features Zachary Parker, President and CEO, and Kathryn JohnBull, CFO of DLH Corporation, NASDAQ ticker symbol DLHC. Following a formal presentation, they're joined by Joe Gomes, Senior Research Analyst for Noble Capital Markets, a FINRA-licensed, SEC-registered broker-dealer, for a Q&A session featuring questions that were submitted by the live audience. You can find Noble's research on DLH on channelchek.com or by clicking the link in the description. With that, I am pleased to present Zachary and Kathryn.
Hello, I'm Zach Parker, and today we're going to give you just a brief overview of the company, a little bit of history and what we've built to date, and we'll cover the financial highlights. We are just a couple weeks ahead of our earnings report, so these highlights will be that which has been made available publicly with some added color. And then our priority is to open time for Q&A. Feel free throughout any of the slides. If you have any questions, please feel free to stop us and ask at that time. Otherwise, we'll accelerate through those so we have ample time for your questions and discussion. Just briefly, most of you, as I understand, know us by now, but just at a glance, the company has been a full-play government contractor for just over 10 years. However, our roots began in 1969. Started largely in the commercial industry, a fair amount of staffing and staff augmentation business, followed by some business process outsourcing, and then had a pretty heavy focus around nurse traveling systems and other aspects of the service industry that was, again, still largely commercial. In 2009, the company and the board of directors felt it was time to take a look at strategic shift in the company. Had outside agencies take a look at what then was largely commercial, publicly traded company that had just under $40 million in government contracting to see what to do. The decision at that time was to divest in 2009 of the commercial business and to take a spin at building the small government business, still publicly traded, but the small government business that was left in the portfolio. And that's when I joined the company to see if we can stabilize the government business and to build it. And so I'm really excited for Kathryn and I to tell you our journey. Kathryn joined me just my second year in 2012. We had laid out a strategy that was to move from that small core business of staffing and staff augmentation to build a very human capital managed business, but focused around solutions. These solutions and core competencies that you see on the screen, and this focused in three market areas. And each of these three segments, defense and veteran solutions, human services and solutions, and public health and life sciences, were part of our strategic plan as we came out of 2014. Many of you may have seen our communications at some of the investor conferences around that strategy in 2015 at some of our conferences. And we're excited today that we now are a company that has all three of those legs of the stool in place, with the competencies that are help to position the company for just the next transformation of the growth in the company. Next slide. As I indicated, as we started this this business in 2010, our exclusive customer was the Department of Veteran Affairs, and that work was largely exclusively with the mail order pharmacy community. We have since been able to build on that business and expand into the customer sets that you see on the screen, that you see in the deck to date, and that includes other federal agencies in the civilian market, which include largely the Health and Human Services Agency within the federal government space. Key competencies there are with the ACF community and the Head Start and the Center for Disease Control. But we've also built and expanded through acquisition into the National Institutes of Health, as where we have a large part of our clinical research and CRO business, and then continue to both organically and then subsequently acquisitively expand around the Defense Health Agency and its adjacent organizations supporting the military health system community. And that includes the telehealth community at Tatrick and the service agencies themselves. And we'll give a little more color around that in subsequent slides. Our strategy was to not build for scale, however, just to diversify. Diversification was important for us because we are highly concentrated at nearly 100% with the VA, and this expansion into diverse agencies were important. But our strategy was to build in a way strategically that moved us up the food chain from a margin delivery basis, largely driven by the type of work we're going to pursue. And so it was important for us to differentiate ourselves through the application of technology. This next slide gives you some context around how we leverage and what types of technologies we've leveraged to grow the business we have to date. On the right-hand side, you'll see those tools and capabilities that we established to expand our footprint, to move our market share from south of 50% of the VA's business to nearly 100% of its mail order pharmacy delivery operations. The spot-in methodology there that we coined in early 2012 was really our tool to measure, manage, and optimize performance execution, where productivity and quality, as well as per capita cost improvements, were key drivers of the customer's hot buttons. That solution proposition included our investment in our TAMS system, which is powered by some really strong COTS software products, combined with that of our ePrat, which is our electronic practitioner resource allocation tool. And as we started to leverage these tools, it helped us to elevate our profile with our current clients, but also to effectively bid and win programs with the Army Medical Health community, as well as the Center for Disease Control. And as we continue to diversify organically, we still kept that DNA to leverage major tools and technologies to expand into that business. At that stage, we had really started to bolster our expansion into the defense and VA and veterans segment. And through acquisitions, we continue to be very selective and very focused on creating an environment that had differentiators for the next generation of DLH. And so we're excited about those that you see on the left side as well. The clinical MIS system, what we refer to as Contour, is one that is very important for us to be able to navigate through the CRO environment, or the contract research organization type environment. Our clinical trials business leverages a worldwide network of partners we'll address a little bit later. They include some of the top major university medical research centers in the United States, as well as some key placed entities throughout the world. in order to effectively manage large cohorts, as in thousands of cohorts throughout the globe, it is important to be able to collect and process that data, to cleanse that data, and to deliver decision support tools for the clinical community. And so our S3 community designed and developed an information management information system to substantially augment that capability. And so that's indicative of the sort of tools that we'll develop. Virtual pharmacy was a key component of our expanded work within the VA that helped us to really be surgical when we looked at due diligence on the acquisition front. And you'll hear more a little bit more about the work we've built in telehealth. But we've moved from both practice and care delivery in the telehealth arena with the virtual pharmacy to really now looking at developing, designing next generation telehealth solutions for our country. Key focus today is, of course, through Kathryn, focused on our military community, but we're also we see that those transcend across the public population health as well. And then the longitudinal studies and things of that nature are very key to our business profile as well. And the study enrollment system that gives us the ability to manage very large cohorts and to repopulate very large cohorts to support studies such as we've been doing for COVID-19, as well as historical programs for cancer, HIV, and other chronic diseases. So it will continue to be a part of our DNA is to invest in and acquire differentiating capability to allow us to compete favorably in this very high growth market. And I'll let Kathryn talk a little bit around the evolution of our business over these years in accordance with our strategic plan. Kathryn.
Certainly. So as Zach mentioned, we laid out as we decided to focus the company on solely government services. We laid out an acquisition plan in 2014 to expand our growth in those key markets of defense and veterans health, human services and solutions, and public health and life sciences. All the while focusing on building enabling technology that would allow us to deliver quality of service, deliver reduced costs, and expand the capacity for our service delivery and move up in more complex, more financially rewarding programs. Along the way, of course, when you're talking about health programs for citizens, soldiers, and veterans, quality and innovations is a key component of that. So this chart gives you some view into the recognition we've received in the health community for the federal programs we've supported and the value proposition we've brought both in delivering large-scale system modernization, leading on implementation of technology and the AI and the ML communities, and for developing networks and responses to emerging and critical public health issues, most particularly and most recently, of course, in the COVID space.
And having those tools are very critical to us, and certainly having differentiating awards and recognition by customers is important. But what's really most important to us being a people-driven business is to make sure we have those type of capabilities and those type of resources to help drive next generation solutions. Our next slide here shows the integration of the type of expertise that was important, that we think differentiates us and certainly puts us on a level playing field with a lot of certainly all of our mid-tier companies and a lot of the bigger boards. On the left-hand side there, you see a lot of the technologies and tools and the type of capabilities that we've built in our resources to really address the science, the engineering and system development, the research and development aspects of our business. We think that is very important as you approach the healthcare community, both from the citizen side and the civilian side of the house, as well as the military. These are key enabling capabilities and resources that are going to be important as we drive next generation medical healthcare solutions and services. Similarly, On the scientific and research side of the house, we lead with working with identifying solutions, as well as really delving into the root causes of a lot of the challenges that we face from a public health population standpoint. In support of NIH, we have some of the world-class epidemiologists who've been working with us for multiple decades to address environmental impacts on the human state associated with a range of chronic diseases. And most importantly, in the last couple of years, and certainly in the last year, to deal with emerging infectious diseases up to and including COVID-19 and the SARS challenges that have been posed for us today. Our support from Dr. Fauci at NIAID, and support for other agencies to identify the appropriate types of therapeutics and vaccine support going forward has been critical to its delivery. For us as a company building this capability, it's important that we have integration of those capabilities within these resources, and at the left hand and the right hand understand how to deliver and what kind of tools we have to help differentiate us as a company. And that will continue to be a part of our DNA, because we're working this life cycle of disease prevention, health promotion, and actually advancing methods and tools to enhance the level of care that healthcare practitioners can provide. To do so, that right side represents a snapshot of the type of healthcare practitioners that bring the domain expertise that is required to work along with our biostatisticians, our clinical research scientists, and the like. And relatively unique for us, for a company of our size, to have north of 250 or so healthcare practitioners, ranging from doctors, nurses, large pool of pharmacists, and others, to help us as we model and simulate and develop AI solutions in order to tackle the challenges that we face ahead. We think that the future of virtual clinical trials, the future of virtual telesurgery and things of that nature will be a result of having each of these components in your tool suite, so that we don't have to go out to other companies to partner and find those capabilities, but can start to develop value proposition and winning solutions going forward internally. So this is a key accomplishment for us now that we have completed that what we call our phase 2 of this company's evolution, and as we look forward.
So just in summary, the strategy we've deployed so far is a strategy we think has served us well and will carry forward. We continue to focus on diversification and mission criticality. We stay at the sweet spot of the intersection between technology and healthcare delivery for all the key markets in the federal healthcare space. We built a team that is capable of leading this company and its continued growth and pursuing the intersection of those talents and those capabilities that we've acquired through our acquisitions and built organically, applying the intersection of those talents across larger and more complicated programs. We've delivered through organic and acquisitive growth, significant growth year on year, but we are positioned with the organization we have in place to operate at a 500 million plus, $500 million level of volume of activity. And we've accomplished that growth, that organic or that acquisitive growth, all via senior debt financing, without having with very minimal equity dilution. So for us, it's a model that works successfully. We're going to go quickly through the financials and show what the result of that has been. So you can see in the period, once we focused solely on operating as a government provider, we have delivered a CAGR of revenue growth over 21% year on year from 13 through 20, and EBITDA growth in excess of 77%, both through organic expansion on contracts, new business delivery, and acquisitive growth of businesses. the recent financials comparing the most recently reported period, as Zach indicated, demonstrates that we're continuing that trend, showing the improvement in both revenue and EBITDA by incorporation of the IBA acquisition we completed at the end of fiscal 20, as well as expansion on the book of business we already had under operation. This shows you the position of debt, and as I mentioned earlier, one of the key features of our growth strategy has been that we've accomplished it via senior debt financing. This snapshot focuses on where we were when we closed our 2019 acquisition, where we closed on $70 million of debt, and by the time we did a deal, just about 15 months later, we had paid that debt down to $37 million. We borrowed an additional 33 to do the acquisition in 2020, and so we, if you will, brought the debt back up to 70 million, which we paid down to 63 by the end of the March quarter, and we expect to continue to pay significantly, make significant payments in the back half of 21, so that we expect to close fiscal 21 with a debt level of about $50 million. The last prepared slide is just to give you a view of the healthy new business pipeline that we have in place. And as Zach mentioned, the phase one has really been all about accomplishing acquisitions that built out our capabilities and established us with a foothold in all of our core markets. Phase two for us now is taking those capabilities, integrating them across markets, and finding ways to move to the more exciting and larger opportunities, which we're prepared to do, addressing the full spectrum of healthcare delivery. So this is a view of the healthcare health pipeline that we have under management. It totals about $1.9 billion, as Zach mentioned at the front end, and it is distributed across all of our major markets. This is a view of the opportunities we'll be addressing over the next 24 months. And with that, I'm going to turn it over to Zach for the next chapter, and then we'll go to your questions.
Yeah, just briefly, we've discussed how important it was as we continue to grow organically across different agencies, as well as the acquisitions, that we leverage the skill sets across the business through collaboration and maintain our DNA around innovation and providing value-added solutions. We only pursue opportunities within where our best value solutions are of interest to the client, and where we have the ability to shape those opportunities and or create differentiating capabilities. And that has served us well to establish a CAGR over these last several years north of 20%, and we'll continue to apply those. We were particularly proud of the fact that we were able to establish a very effective secure cloud computing environment. The cyber community and the convergence of cyber and health IT has been very, very strong over the recent couple of years. It has served us very well supporting existing clients, and we see on the horizon opportunities to deliver and to leverage that as a tool suite to support big data analytics for policy decisions around healthcare, for helping to deliver appropriate, secure enclave environments for clients to use us as a tool for not only hosting, but doing big, large data analytics. And our platform has been designed to such. So we think we have a portfolio right now that that really has reflected the delivery on our promise in 2015 strategically, and we're excited about what the future holds. So with that, we'll turn it back over to our host.
Thank you, Zach and Kathryn, for that informative presentation. I am Joe Gomes, the Noble Capital Senior Analyst who covers DLH. Here are the questions I've selected from the audience, as well as a few of my own. So I'm going to start off lumping together a bunch of questions here. You've recently renewed some of your major contracts, VA, logistics, Head Start. Can you provide some more detail as to where these stand? Are all the protests resolved? How are they progressing? And any timing for award of the VA pharmacy services contract?
Sure. Yeah, those are regular questions that we keep top of mind both with our board of directors and a number of investors in our community. Right now, we are through any ranges of protests on any of our contracts. With the only one that's pending is with the contract with the VA for our CMOC logistics. It was awarded to us in April. It's pretty much a public record that the grounds of the protest was one of the small businesses, service-disabled small businesses, filed a protest focused around cost. And the VA is running through their diligence, as you might expect, to evaluate how to address that. We continue to feel very optimistic with regard to the results of the pending protests. It is, however, running its due course, as you might expect, with the government acquisition community. And not at liberty to comment too much more there. We're really not involved. This is one where we have not intervened on behalf of along with the VA, unlike some of the ones we've done in the past. So it is purely being done internal without visibility to us. But we do have a regular engagement because in the meantime, the government has had to bridge and provide us extended contracts, and we're continuing to engage with them in that regard until it's resolved.
Okay, thank you for that update. And as you mentioned, you did some recent acquisitions, S3, Irving Burton. Are they fully integrated? Are they providing the expected synergies, especially in the ability to bid on larger, more complex contracts? Can you give any examples here?
Absolutely, yeah. So they are absolutely performing as expected, but you hit on what we are most excited about, which is the ability to pull through that capability and apply it in other parts of the business. So, for example, Irving Burton has substantial capabilities in the telehealth arena, which we already had some capabilities in, but theirs is actually has been substantially tested through the time of COVID, and particularly addressing concerns for military families throughout that. So that experience. So we are excited about using their capabilities in other arenas in the public health space, for example. And really that's where we spend the bulk of our time, is focusing on ways to take capabilities that have evolved in a business, part of the business already, and making sure we give it exposure throughout the organization so that as we pursue and address opportunities, people understand the full breadth of our capabilities and what they can access in response to proposals.
Yeah. And the true test of the true measure of how effectively the integration is turning out is really how well we're able to take that 1 + 1 = 3 out of it. And we've been able to pursue deals now which come out since the acquisition of 2 or 3 GWACs, or government-wide access vehicles, if you will, that are large, major IDIQs that for 10 years you're either going to be in the game as a prime, or you're going to be out of the game, or at best a sub. And with the acquisition and integration of both the 2016 acquisition that brought a lot of our technology capabilities around IT and DME, coupled with clinical trial research and research arm around scientific research, environmental health research around chronic and infectious diseases, which we completed in 2019. And then you add to that the advanced development, research and development capability around all of the systems and tools and information systems that are being used and deployed across those first 2 spectrums, positions us now to be able to prime opportunities such as the CIOSP3, which is a large NIH-driven healthcare research IT contract for the next 10 years with multi-billion-dollar ceiling. Similarly, the Defense Health Agency has recently come out with what's called Omnibus 4 to support the medical research and development commands, far-reaching research and development, medical research and development efforts. We've been able to bid on those as prime. These are things which before 2-3 years ago, had we not reached this state of our development, that we would have best been looking for a subcontracting position, which really does not have the type of profile to allow us to do the kind of growth that we're now laying out for the next 5 years. So we're excited that we're now in position to prime those. The CRSP4 is one that is under proposal development by most in our industry today, so it's not a secret, right? So that's giving you the inside baseball there. But these are indicative of now how we're able to leverage these capabilities and not have to take a subcontractor seat to other big companies, but now be able to compete, and we believe optimistically, favorably in this market.
And it was exactly the fact that we expected to be able to integrate capabilities from all of our acquisitions. That's what motivated us to keep our acquisition program focused on thematically sound and clean health focus instead of trying to just grow for scale. We thought it was really important to be thematic in the way we grew so that we would have capabilities that would intersect and be relevant in our various markets as we viewed acquisitions for their footprint in the market. We still expected their capabilities to be relevant among the other markets that we were focused in health.
That's great. Now, you've kind of touched on the next question here, but I'll ask it anyways and see if you have anything more to add. You know, you highlight the healthy new business pipeline, and the question really is, you know, could you talk a little more on the strong addressable markets, where you're seeing most opportunities today, and when do you think some of these awards could be announced?
Yes, no, that's a great question. We you know, with the advent, you know, it was very important for us to bring in a centralized, corporate focused, strategic business development capability. And 1 year ago today, in fact, 1 year ago this month, I should say, it was important for us to bring in the caliber of Jackie Everett so that we can have an enterprise view rather than look at each various opportunities from the lens of just a performing contract. That was very important for us going forward. Jackie has been instrumental in helping to build and shape not only our pipeline, but the type of resources we need to elevate our win probabilities and capture the synergies of all these tools, technologies, so that we can deliver winning value propositions to our customers. So that was the first part of it, was making sure that we can build a robust pipeline that had us not taking a lot of backseat positions. That had been our DNA all along. That was part of our strategy. Kathryn and I, we've always had extremely small book of business around that we're not the prime, and that will continue to be our case going forward. As you indicated, the multiple award IDIQs is a major government transition right now. There's another one that's evolving. It's going to be coming out in the not too distant future called Best in Class Multiple Award Contract. The acronym is BICMAC if it holds. It's going to replace the large OASIS contract where a number of the civilian agencies in particular, and to some extent DOD, have been doing a lot of their program management, to some extent research, some technology, IT technology capabilities, but this is a contract that is also going to be what we believe widely used, and it's one that we have in our crosshairs now as well. There's some low-hanging fruit. There's some opportunities in our pipeline that are north of, that take us to about half, somewhere in the 300, 500 million range that have continued to slip to the right. Some opportunities that have been in our pipeline, from 2020, and they were here in 2021. We're hopeful that with the budget stability that we've got from both the president's submission and what Congress has been able to get done and submit, that we'll see some of these come out relatively soon, so they can translate into FY22 revenue streams for us downstream. We have had an incredibly high amount of proposal development activity over this last quarter or through this year, through evidence of our ability to lean into those with Jackie and her team. She's continuing to build that team, and we're looking to continue our success with win rates, not only on the smaller opportunities, but now on these large macro opportunities.
Okay, Zach, you keep going, answering the next question I have that keeps coming up here.
Sorry about that.
As you mentioned, the DLH infrastructure has been built for 300 to 500 million revenue enterprise. When do you see getting to those levels? How much of that from organic growth and how much of that from acquisition growth?
Well, regulatory compliance.
No, we don't view either one as to the exclusion of the other. So we're more focused on meaningful growth versus the channel through which it comes. But clearly, we now feel much more empowered to have organic growth because we've assembled a set of capabilities addressable across all the health markets, and we've got an entry point, if you will, a channel in all of those markets through long-standing customer relationships. So we're prioritizing organic growth from that perspective because we've prepared ourselves well to be able to address that market through proposals. But of course, we'll continue to view opportunities to grow acquisitively as well.
Yeah, scale matters now. We're a small mid-tier company. Having gone from south of 40 million to 200, to north of 200 million in the time period that we have, with a combination of every year, we've had 10 consecutive years, 11 consecutive years of organic growth. Despite having erosion from certain programs throughout this period, and have very key strategically aligned acquisitions that help to drive the top line as well. We think now that we've got all three pieces of that of our market segments pretty strongly supported by tools, technologies, and key personnel resources. It's important for us to continue to create opportunities for our workforce today for growth and expansion in their careers through growth. And that organic piece is manifested by some larger programs that we think we can swing the bat at right now and have very good win probabilities. It's frustrating sometimes after week to see these extensions, much like folks are looking at on our CMOP VA work, where we've been extended now for several years. Some of these that we were expecting to come out that are very material, we're really seeing signs of certainly should come out in the next year. So we're confident that that'll happen. But that scaling, our strategy now is accelerate that growth trajectory. We did very well relative to the market over these last 8 to 10 years. But if you can think of it in terms of with what we have now on our bench, we've got to convert these things to taking back seats and turn those into primes. That growth trajectory we expect to be accelerated, right? And obviously we can't control when the RFPs are going to come out from the government, et cetera. But our ability to be able to chase more under Jackie's leadership and having things get qualified earlier on, that we can start to have influence over our win probability, is going to pay dividends for us in the next 3 years. And we think that that glide path to get to that 350 to 500 is a substantially shorter window. And acquisitively now we can factor in the impact of scale. Right now that we have those capabilities, we think that we're ready to lock and load and do some things far more meaningful than we have historically. So we continue to look at some opportunities, and as we always have, and we'll be proactive in that market.
That's great. So in terms of enhancing shareholder value, the company generated a 7.5% operating margin in the fiscal second quarter. Where do you think operating margin can rise to as the company continues to add on incremental revenue?
Yeah, I think that's a pretty competitive operating margin. We see a little more opportunity to continue to improve there, but I think it's more likely that we're going to improve in terms of the absolute dollars as we grow the business. So We're not trying. There is investment required in order to get that going through business development primarily, as Zach mentioned. We've got the structure, we've got the people, we've got the scale, we've got the capabilities. We just need to run at the market now and get some nice wins. So, but I think that the nature of the work we're managing is delivering competitive margins. I think that's not an issue for us. It's a matter of getting additional scale and getting additional shareholder value through sound growth, continued growth.
Great. And one of the projects that I get really excited about is your Infinibite Initiative. And I was wondering if you might be able to provide a little more color and detail there.
Yes, that's one that we're really excited about. We have for several years now provided the secure data environment for a number of key federal customers. We have found that particularly those that have decisions to make leveraging healthcare data, it is absolutely essential that they feel that the cyber environment is sound. We have moved our secure platform each year north of the requirements usually for most of our FISMA required customers. As you all know, we've communicated regularly that we are establishing ours to be a FedRAMP level secure environment. That happens to be the federal government's categorization, if you will, of the ability to meet the most exacting standards of providing a secure environment to host healthcare data and other sensitive data. We also live in an environment now where we are a cleared company and have cleared facilities, cleared as in DOD, and we're moving swiftly towards achieving what's called the CMMC capability, where it's not just federal regulated, but the DOD is leading the charge for the next level of being able to communicate your cyber security maturity level. And so we're continuing to invest there. We have an advantage over many of our peers and competitors in that we have created the Infinibite solution. It has been operational today. It is operational at the levels of security that FedRAMP is calling for, and we just continuing to look forward to building the point of presence with various customers in that arena. It also is, we developed a cloud-based solution that is very effective in hosting these large petabyte sizes of data for these clients. We're most interested. We have built it with tools and capabilities so that it is a platform as a service type of solution intended for high transactional data analytics for folks who are using it, not just hosted. We're not trying to compete with Amazon in the sense of if you want to host some data and just archive things, et cetera, and do so in a cheap environment. That's not what we're building. We're building this for agencies like the Health and Human Services, the Department of Homeland Security, and hosting a lot of data around human trafficking kind of sort of data to be able to support Customs Border Patrol, the ICE community, as well as a large set of defense and military health systems customers. So Infinibite has been broadened as we continue to infuse it into the DNA of our company and take it beyond that of just the clinical health and clinical research.
Great. Now, I know Kathryn keeps a very sharp pencil on paying down debt, but does the company have any capital needs that you could foresee here in the short to medium term?
And nothing substantial, Joe. Thank you for that question. We are, as a services business, we have very light capital requirements, less than $2 million a year. We are, and so we do deploy our capital principally for debt reduction.
Okay, thanks for that update, Kathryn. And What's the company's appetite to pursue non-governmental work if opportunities presented themselves, or is that total addressable market in the government space so attractive, so big that you're just going to keep your eye on that ball?
No, that's a great question, and it's one where strategically it is important for us to look at. Is now the time to open that aperture, and we have. We're still building our team under each of our operating unit presidents, as well as our business development team under Jackie, to increase our market share in this very large United States federal contract environment. We still see a substantial opportunity to increase share in each one of our agencies. We have designs and a strategy around how to do that. We have specialized technologies and tools to help us to do that. We also have a small book of business where we've been supporting non-federal agencies, right? We support certain states, right? And of course, the USAID happens to be a federal agency, but one that is operating in a manner that is very focused around its different constituents. And we're going to continue to have that as part of our book of business. And there are times where we see an adjacency in a non-governmental opportunity that makes sense for us and has a high win probability. So on occasion, we're going to continue to pursue those. And that's kind of how we've gotten into some of the state business that we have had to date. It's in the non-federal business, and they'll continue to be part of that. If we do anything very material in that transition, I think it's going to have to be coupled with an acquisition because we are very much a highly federally acquisition regulated type of business. And the further we move away from that, the more risk we create in our book of business that we would have to manage and segregate in a way that makes sense. Kathryn and I have both been parts of organizations that have done that successfully, right? But it is very important for us to keep our strategic focus where we can have high win probabilities today and with the type of work that integrates well into the current book of business. So it's not a no, but we're going to be very selective in our gate review process for making those decisions.
Thank you.
It's a nice problem to have where the opportunities are so many that you have to prioritize and pick the best, the one with the best outcome, best probability.
No doubt. Let's finish off with this one. There's been lots of talk in the press about inflation, supply chain issues, labor costs, the difficulty of finding qualified people. Are any of these impacting the company? And if so, how are you approaching the issues?
Yeah, inflationary pressures, and I still today can't figure out why we're seeing more indicated inflationary movement here with all that the federal government's been doing over the last couple of several years. And it has started to affect the GovCon industry. I mean, we're starting to see some signs where some decisions are going to have to be made in terms of how we as an industry, as well as many of us as companies, are going to have to address it. But having said that, while we're not bulletproof, we still find that while there's strong pressures on use one example with the $15 an hour minimum wage thing that has been gaining steam quite a bit, has driven a lot of our commercial competitors to start to unilaterally move in that direction. And so for the non-highly skilled scientific technical professionals that are used quite a bit in our business, certainly makes up a heavy component of our VA business profile today. This is a competitive threat that is very, very, very real. We have seen real challenges that we've had to really execute on our EPRAT solution and on our talent acquisition side of the house. Kevin Wilson has brought together a team to really address that in a way to help mitigate some of the challenges around our CMOP community. But it certainly is a competitive threat that we're all going to have to look at as an industry, and federal government's going to have to take a look at it. We're taking it very seriously. And then on the Hill, we still have it's important for us to maintain good connectivity with those decision makers, both in 3 or 4 committees of interest, to see how to make sure we're not caught off guard to where it's going to have a negative impact for us. But make no mistake about it, the competition for strong key resources and ability to to pay and retain resources against the commercial competitive threat is alive and well, and the impact of the government putting a heck of a lot of dollars out there has made it difficult for us. So we've clearly had people that have made the case that it's more cost effective for them to live off of PPP and some of the government funds than to work hard in this environment. But we'll get through it. We always have. We've always been able to come up with an approach that has a value proposition that helps our client and our workforce.
Thank you for joining us for this virtual roadshow presentation brought to you by ChannelChek. View our YouTube channel for more video content, including C-suite interviews, virtual roadshows, and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelchek.com or click the link in the description to access equity research, news, and advanced market data on this and 6,000 other small and micro-cap companies.